Hello, everybody. Today, I wanted to bring on Dave Thompson, who's a mortgage broker at RBC, because there's so much uncertainty in the market. I was like, you know what? I want to speak to a mortgage broker. Dave and I have had a bunch of these conversations, but I wanted to bring him on again just to get his thoughts on the market. Dave, how's it going?
Awesome, Alex. Thanks for having me today. Good to see you again.
All right, do you want to just jump right in?
Yeah, let's do it.
Okay, I'm excited for your thoughts. The numbers just came out. Obviously tons of inventory, prices are down. But what are your thoughts on the market and where do you think this market is headed within the next like 3 to 6 months?
Yeah, honestly, it's a great question. You're going to get a lot of different opinions on this. On my side of the business, we kind of feel things. We're kind of a leading indicator as to the consumer and what people are feeling. That's from pre-approvals, and when we see offers, we see the conditions on them or how our people are negotiating. And it seems like consumer confidence in real estate is probably at like maybe a 5-year low right now, as far as value is concerned. And it's funny, people, were all about real estate during COVID until rates hit a certain point, and then we've been in a little bit of a free fall on the price side of things for the last probably 2 years, I would say. And so we are starting to see some people kind of nibble and jump back in as far as getting pre-approved for maybe that investment property, maybe buying for their kids, just because prices have fallen so much to a much more affordable level on that. As far as like the short term, there's not really any catalysts that are out there that are gonna, help support price increases. But we're all hopeful that we can maybe see some stability on the price side in the next kind of 3, 6, 9 months from a time frame perspective. But at this time, rates are pretty affordable. Cost of living from a mortgage payment perspective is a heck of a lot better than it was 24 months ago. And so, we just need a little more consumer confidence to come back. And that takes time on things. We all jump in and buy stocks when they're going up, and when they're falling, the same stock that we bought for $100 more, we suddenly think it's a bad idea to buy that. And so we're in that kind of frame of mind with real estate right now, but that'll pass. But when that'll be is kind of anyone's guess.
It's funny you mentioned COVID because, I've been saying this to people over the last like month and a half to 2 months. This time right now is actually reminding me of right when COVID was starting and people were super anxious about the real estate market. And then obviously prices came down a little bit. Then that's when people got really good deals on properties. And then obviously everything blew up right after COVID. So do you see any sort of similarities between that time and what's happening right now?
Yeah, I mean, I think I tied to immigration probably a little bit in that, like, when COVID hit, kind of everything grinded to a halt. And right now, one of the factors influencing thing is we're not bringing in new people into Canada. And so, our population is stagnant. And so obviously that means demand is going to be down a little bit. I don't know, you're probably seeing that in the rental side of things. Like how much the rent's down. If you think of the last 4, 6 months, like
I would
it,
say at least 10 to 15%.
right? And so
And
there's,
here's the thing, a lot of people are still holding on to those prices that they could have gotten 2, 3 years ago. But then their properties are just sitting on the market for significantly longer. And, I think the rental market's continuing to come down. So yeah, I think at least 10 to 15%, if not more, honestly, within the last like 3 to 6 months.
yeah, right. And like what's changed on that? The only thing that's changed is immigration, student visas, right? Those things have kind of been put on hold right now. And so now the market's correcting back to, a much more stable, or normal supply and demand, where demand is just not what it was kind of 2 years ago. And so we're
Mhm.
seeing that on price on rental, and we're seeing that on price on condo as well as homes out there in the market. So, but I mean, if we think of the glass half full approach, 2 years ago, we were probably doing this podcast and rates were at an all-time high. So 2 years ago, you couldn't get a rate that started below 6%. Okay. And so in 24 months, we were at 6%, and today we're 4% or even lower on some products. And so that's a huge shift. That's 33% interest rates have fallen, and that's not changing the price standpoint right now. And so, you know, it's a much more affordable from an interest rate perspective. But home prices probably, are probably still going to come down a little bit before they stabilize. How much more is anyone's guess, but it's a heck of a lot better time to buy today than it was 2 years ago. That's for sure.
Exactly. And I think a lot of people aren't looking at this whole thing from that perspective. Because, we were talking off camera before and, you know, a condo that was worth $700,000 2, 3 years ago, you can now pick up at like 550, 560. And that brings me to the condo market. Okay. What are your thoughts on the condo market? Obviously, there's a ton of inventory. Prices have gone down. Um, the actual sales numbers have gone down. But I think within the next 3 to 6 months, there's going to be even more condo inventory and prices might come down. What are your thoughts?
I think for someone with a long-term mindset that picking up a condo in the next 3, 6 months is a great idea. I mean, ultimately the reason people bought condos 2 years ago from an investment standpoint was, hey, in 10, 15, 20 years, I'm going to have this asset that's been paid down. My mortgage is going to be way less. And sure, we got carried away on how much they'd be worth. We were seeing some $1,500 square foot stuff. New construction was going even crazier than that. But the reality is like whether you bought a condo 3 years ago or today, or if it's investment and for your family down the road, 10 years is a long way away. And so we still have the same mindset. And if I can buy the same asset for $150,000 cheaper today than I could 2 years ago, and my goal is still in 2040 to have something for my kids, it's a heck of a lot better time to buy today than it was 2 years ago. And while we don't know where the bottom will be, you also don't want to try to time the bottom because we've seen how fast things can kind of ignite in the market when it does, pick up and demand is there, and suddenly you got multiples on things. So it's a great opportunity for people that want to maybe add their first investment property because of the cost. The entry cost is so much lower on that
Mhm.
front.
I always tell people, especially people that are buying condo properties, I say, listen, this is not a short-term investment. The average amount of time that people spend in a unit is 7 years in Toronto. So I'm like, if you're buying a condo, you should be buying it thinking that you'll live there for 5 to 7 years, or at least keep it as an investment for 5 to 7 years. Because, what are we talking about? 5 to 7 years down the line from right now, prices will be significantly higher. They'll probably be back at peak prices, if not higher. So, like, I agree with you. It's not a short-term investment. If you're keeping it for, 5 to 7 years, like you will be making money on that property.
Yeah. And even if they're not at peak, right? Like it doesn't have to get there for anyone who hears that and says, I don't believe in that. That's totally fine. But let's just pretend in 10 years' time that the condo's gone up on average 2% or 2.5% each year. You've entered at such a lower price point that your mortgage is so much lower. And so the ability to pay down, is greater. And yeah, like you're still up, call it 40% net. And so if you bought for 500,000 and in 10 years you made 200 grand in value from appreciation. That's awesome, right? That's a normal market. We're just used to this hyper like quick return, Bitcoin going up 5 times in a year, home prices rising 20%. Like that's not normal out there in the long term. It's not sustainable. And we've seen what happens when it's not sustainable. We pull back to a normal kind of a normal trend line from a
Mhm.
price perspective.
Absolutely. The other thing I think that a lot of people aren't taking into consideration is that new builds have basically stopped across the city. Like it's crazy. There are so many construction projects that have been halted, whether, they haven't been able to sell enough units to continue the project or if there wasn't as much interest from the very beginning. So I think that, within the next few years, 3 to 5 years, if those projects don't start up again, and if there's going to be significantly less new construction in the city, resale condos will make a comeback because obviously people obviously need places to live. If there's no new construction, you can't buy pre-cons. So I think those prices will bounce back. But as you said, it's really tough to tell when that will happen.
Yeah, a shortfall in supply is what you're saying is coming eventually.
Absolutely. Yeah.
I've heard that too. I think it was 2028 is the year, or 2027.
Yeah.
There's just a fraction coming to the market, if they even come to the market still with all the pauses and delays and everything going on, right?
hmm And yeah, from the new construction, I always tell people to kind of stay away from pre-con, just based on you have to obviously qualify for the mortgage prior to submitting an offer and getting it, and then you have to qualify again once the project is built. And it's one of those situations where I think right now there's so many people that have like lost deposits and with the buildings being halted or like interim occupancy being so long or potentially so long
Right.
that people are just completely off of the pre-con market. So yeah, I think that's part of the reason why condos will come back eventually within the next, yeah, 3 to 5 years.
Totally. On the pre-con side of things, just one
Mhm.
thing for your clients and whoever's listening or watching this, just a real key takeaway is there are something called blanket assessments, and these are saving people's bacon. And what that means is that you might have bought a condo in 21 or 22, maybe you paid 13, $1,400 a square foot, which was the market back then.
Mhm.
You're coming up for closing in 6 months. If you have a blanket assessment, so RBC, we're the leader in that. TD has a couple. If your building is under a blanket assessment, we value your property at what you paid for it. So you might have paid $800,000 and the value today is 600 grand. If it's under our blanket program, we'll still honor 800,000 as your purchase price, meaning you don't have to come up with a 200,000 shortfall plus 20% on that. And so
That
that's
that is so important for people to know. Take notes. This is why I have to bring Dave on because of stuff like that. And so wait, so it's only RBC and TD that does these blanket assessments, or is it do other institutions do that as well?
basically reach out. The best thing to do is reach out to your main provider, your broker, myself, whoever you want, and just ask if you've got a new construction, it's closing in a year or two. You want to know if there's a blanket assessment on it. And if there's not, then call around. So we are the industry leader in blankets. We've got more than anyone by a mile. To my understanding, it's us and TD are who dabbles in it. Maybe some of the other guys do in small bases, but I mean, we've got dozens of sites in the city of Toronto that are under the blanket assessment. So we're honoring purchase price on that, which is a huge win for the consumer because it can be pretty ugly right now for people.
Absolutely. And a lot of these, just so people know, a lot of these pre-con buildings, when they make you sign the documents, people can't even sell during the time that it's being built. So you can't even sell your unit prior to it being completed. That's why a lot of people are losing deposits. And I think that's such a
Yeah, and
good
they're
thing
getting
for people to
sued,
know.
right? The builder, it's not even
Everyone's
about
getting sued.
deposits anymore. Builders are lawyering up on that just because they've got skin in the game too. They need that purchase price.
I have a real world scenario for you, my
Okay.
own scenario. So my mortgage is up December 1st. I just got a bunch of documents. I can choose a variable rate for 3 years, variable rate for 5 years, fixed rate 3 years, fixed rate 5 years. If you were to be buying a property right now, or if you were in my situation and you wanted to renew, what kind of product would you choose and why?
Well, that's a great question. And we all have our own biases as
Yeah.
far as value for money and how we feel about our money. So I would answer that question by kind of not answering it, but just kind of saying, here's two different mindsets. And whatever mindset you are is the right answer for yourself
Mhm.
on that. And so, fixed rates right now are fantastic. They're the lowest they've been in 2.5 years, even longer, per se. And so a fixed mortgage rate it's going to be a set it, it's going to be a forget it. You're not going to think about Trump. You're not going to think about Bank of Canada or the US Fed or what's going up and down with interest rates. And it gives you a sense of peace of mind. And that peace of mind right now costs you very little. A fixed mortgage rate today is, let's call it a quarter of a percent higher than variable rates, which means on $500,000, it's $1,200 more over the course of the year in interest that you potentially spend more on that. And so that's the peace of mind approach. Set it and forget it. Variable mortgages, they are cheaper today. They do offer some flexibility. And the flexibility is that if the Bank of Canada was to lower rates further, then you're going to benefit from that. Is it worth being emotionally attached to an interest rate if you're someone who's kind of really worried about rates going up or down? Absolutely not. I mean,
Mhm.
$1,200 over the course of the year on a $500,000 mortgage is not going to change your retirement plan, right? That's $12,000 over 10 years. That's not changing anything. So it's not
Mhm.
worth it for yourself. But if you want flexibility because you might sell your investment property down the road, you might move, or you just are like super of the mindset that rates will be lower down the road, then variable offers the best option for you because all variable mortgages can be flipped into a fixed at a later time. So you're
Mhm.
buying time and you're still saving some money in the interim. So, if I'm doing it myself, I do this every day. I'm comfortable with it, so I'm kind of leaning more variable. But I see it, the ebbs and flows of conversations where, when rates are falling and it's all over the media, people want variable. And the second there's any sort of change in the narrative of the media or Trump or tariffs, people call me that are talking variable, like, what's your fixed rate?
Mm.
And for those people that are that quick to kind of consider fixed, variable is never the product for them because it's going to bother them if they're wrong on that. And so that's kind of how I answer the question. Um, because each person's unique and individual.
Yeah, one of my other properties that I purchased like 2022, before you and I were as close as we are. So I worked with another broker,
Oh.
and he basically told me to go variable, and then obviously we know what happened with the rates, and yeah, that property value is down pretty drastically as well. Say I wanted to sign a 3-year fixed rate, but then I wanted to sell the unit within a year. What are the pros and cons? Like, what do those penalties look like? If you can give some sort of insight on that, because a lot of people are going to be in this exact situation that I'm in right now.
Yeah, it's a great question. So we probably aren't going to do a fixed mortgage if you're considering selling your property or definitely selling in the next year because the penalty is unknown depending on the lender. So some lenders out there, which is kind of your credit unions and smaller guys, they're 3 months interest to break a fixed mortgage because they don't have what's called a posted rate. So there's not interest rate differential. So if you're with that lender that's always 3 months interest, no problem. You know your penalty to get out of the mortgage. There's no interest rate shock if rates were to fall.
Mm.
But if you're with a big five bank, a couple other big lenders out there on fixed, if you hold the mortgage for a year or whatnot, interest rate differential might kick in. And that's this formula based on remaining time and current market rates, as well as the discount you received. And so, if we take an example, we say we've got 400,000 left on our mortgage and rates today are 4%.
Hmm.
To break that mortgage, if the variable's at 4%, to break that mortgage and pay 3 months interest is $4,000.
Hmm.
Known, it's a fact. 4 grand in the grand scheme of the transaction is not too bad.
Yeah.
To sign a 3-year fixed mortgage and be at sub 4%, but have interest rate differential kick in, you could have a penalty of seven, eight, nine, $10,000 on that same mortgage. And
Mm.
so it's an unknown the amount until we have the formula. We know where rates are at that time. But if rates were to fall in the next year, your penalty will go up and it'll be more. And so I don't think it's worth the risk of paying 10 to break when it could
Hmm.
be four. And the four is a known and the 10 is an unknown,
Hmm.
variable to fixed. And so it's always a question we ask people at renewal or when setting them up, if they've owned their property and they're moving mortgages or moving lenders or refinancing, is just kind of short-term, long-term goals. Obviously, life happens and we can't plan for everything, but understanding the flexibility piece is important.
Hmm. Gotcha. That's great insight. And I'll ask you more about this off camera. Okay, now, for everybody watching, if somebody wanted to buy a property right now, what is the step-by-step process of them applying for a mortgage through you? If you could just take people through the step-by-step process.
Yeah, yeah, sure. Honestly, it's super easy. Getting a mortgage or being pre-approved is the same process as honestly applying for a credit card. So whenever you're looking for financing or to buy a property, three things go into a pre-approval. We have to confirm your income, whether you're employed as a salaried individual, salary maybe plus bonus or commission, or self-employed. So we gather income documents. We verify down payments. Did we have access to funds in our name, or are we going to get gifted funds from parents or family? And then we just say, has this person paid their bills in a reasonable fashion? So is their credit history appropriate to be able to support a mortgage? So we just don't want to see someone take a 6-month vacation on paying their credit card and having a bunch of lates there. And
Mhm.
so whenever I do a conversation with someone, the actual knowledge or information that I share. It's typically 20, 30 minutes. I teach you about mortgage payments and stuff like that. But from a document collection standpoint, it's maybe 10 minutes of effort for a client to generate what's needed and send over. And then from there, it's 2 to 3 days for us to formally pre-approve you, be signed off by credit, and be good to go, knowing that we're comfortable lending a certain amount of money to you on that.
And by the way, just as a side note, Dave saved a bunch of my clients over the last few years. Some people needed a quick pre-approval, and you've gotten it done within like a day. So usually the
Yeah,
process takes like 2 to 3 days, but you do me favors, I guess.
you got to be quick when it responds. You got
You
you
got
got
to
to
be
jump.
quick. Okay, Dave, is there anything that you'd like to share? Is there anything you want to add so the public knows what's going on?
Honestly, I would just say that the sky isn't falling the way media makes it seem like it is. The market is just being a market, and it's finding a new norm, a new healthy balance between buyers and sellers. And this is all a good thing. We a lot of talk about how's anyone going to buy a house when they're older? How are our kids going to afford real estate? And so, maybe it's made us rethink the balance between owning real estate and working on our savings and stuff. And so this kind of had to happen, and I don't think it's as negative as we make it out to be in the market. And so, it's whether it's today or next year, it's a way better time to dip your toe if you want to maybe diversify with a rental property, or you want to buy that next home for your family. I mean, just think of a transaction where you were super proud, if you owned your home and 2 years ago, you could have sold for 1.5, but you were going to buy for 2 million. But today you're going to sell your home for 1.2, but you can buy for 1.7. Well, your transaction costs are $35,000 less in that scenario
Hmm.
of soft cost. You pay $35,000 less to transact in that example than you would have at 1.5 to 2 million. And yet we as consumers feel so much better because our home is worth more. We feel better to buy for 2 million when in reality, it's way cheaper today to transact than it was a couple of years ago. So that's a big win
Also, a
for
lot of people don't realize that obviously the sale price will be lower, but the purchase price is significantly lower as well. So you're winning on the purchase price. I think you're winning overall.
big time.
Yeah.
Big time you're winning overall, right? So, if you're selling for $300,000 less, you're 15,000 plus cheaper on the soft cost for commissions and stuff. And if you're buying for 15,000 less, you're 15,000 less in land transfer tax.
Mm.
And so there's $30,000 in your pocket to buy the exact same asset that you would have bought 2 years ago that you were super excited about 2 years ago, but that was because your home price was worth more, right?
Yeah.
We all get super excited by that. And in reality, you know, whatever it's worth today, it's the difference is still the same in what you're buying in the future. So yeah.
Okay. Dave, thank you so much. Where can people reach out to you?
Yeah, I mean, just call me anytime, 416-543-6129, or I'm sure you can put up on the link here my work email. Either works for me, and always happy to just chat. And for any of your clients that are dealing with somebody else, like I'm not here to take business. I'm in the relationship game. I've done this for 18 years. But if you just want a sounding board, I'll be the first to tell you kind of what to do with the person that you're dealing with on that front. Okay.
All right. You're the best. Thank you so much. Everybody, thank you so much for watching. If you've gotten any value from this video whatsoever, please consider subscribing. And if you have any questions or comments, give me a call or send me a message. I'll help you every step of the way.